So, navigating markets through blockchain intelligence. So, it's all about data, the new gold. You can walk through, no worries. All right, last check. Would you like to check it?
Check.
Tip top, all right, there we go. So, I would say without further ado, because time is ticking, not yet, it's like all zeros, but if you can arrange the time, that would be perfect, all right? My name is Eric, I'm the founder of Crypto Nerds. It's a crypto education company. If you want to know more, come over, but I don't need to explain a little bit or more of me. I would say the stage is yours, you're the stars, you're the panelists, and I would like to give to you, Anastasia, the microphone to introduce you and tell the audience a little bit more about yourself and the company you're working for.
Thank you. Thanks everyone for coming to the panel. I'm Anastasia, Kaiko's head of growth. For those that are not aware, Kaiko is a crypto company. We do market data and blockchain data in destination of financial institutions, but also regulators. Kaiko has been around for 10 years now. Myself, 6 at Kaiko, and basically leading marketing, content, and everything growth in the company. So yeah, great to be here.
Great to have you. Thank you. Who would like to introduce?
Next?
Yeah. Go.
Yeah. Hello, everybody. My name is Salih. I'm with Chainalysis. In my previous life, I was a police investigator for 8 years. And now I'm in Chainalysis. Chainalysis is a data and blockchain intelligence company more tailored to compliance officers and law enforcement agents. And what we do is we process attribute data and in the end hope for bad guys getting arrested, basically.
Good. Florian?
Hey, I'm Florian. I work for Dune. I've been there for 4.5 years, first as a developer relations person, and now I do product management. Dune is a data platform that just stores all public blockchain data, and then we allow kind of like people to build their own adventures with that data. So if you build a product or you've launched a stablecoin or you've launched anything that actually produces data on-chain, then you can use Dune.com, which is a web app, where we can kind of like give you this data in various methods to analyze that data.
Thanks.
Firstly, thank you to you. You called us stars.
Yes, of course.
That's a great start. Thank you to everyone else for coming today. My name is Daniel Blackmore. I'm Chief Commercial Officer at Glassnode. Glassnode is a digital asset, data analytics and research firm. We tend to focus on traders, investors, researchers and content creators, helping them find alpha in the markets. I'm also board advisor to our sister company, Swissblock. Swissblock is a digital asset and traditional asset, systematic and discretionary proprietary trading firm. Prior to my time at Glassnode and Swissblock, I was in Coinbase Institutional in their sales team. I also spent a lot of time at Nomura as a government bond trader and salesperson for most of my career. I've spent stints at Bloomberg as a cross-asset specialist, and way back when started my career in management consulting. So that's me in a nutshell.
Perfect, thank you so much. To set the panel for the audience, so what would you say? We have like different use cases, different views from your companies on data. How would you define blockchain intelligence in your field? Who would like to start?
Shall I go first? Maybe I'm the easiest. Yeah, for us, it's at Glassnode, in the Glassnode context, to repeat myself a bit earlier, it's very much data, analytics, and research, and those 3 pillars coming together as a holistic offering to give you intelligence. Raw data on its own isn't very helpful, so being able to normalize that data, put it in a very accessible way, either directly through APIs or then through analytics is key. But even then, some people still don't necessarily know what to do with that data or those analytics. So the research piece on top combines the whole, is the glue that holds it all together and creates the intelligence offering. And then lastly, we're, again, very much focused on traders, investors, researchers, etc., trying to find alpha in the markets.
Yeah, it's similar with Chainalysis, just that our audience are not traders, but investigators. So what we do is we also take the raw blockchain data and try to combine it with off-chain information and context. And this could be, for example, we try to cluster addresses or transactions, and we try to attribute them. This could be like your exchange or Bitcoin ATM, for example, but this could also be like shady organizations, like terrorist organizations, or dark web markets, or all the bad stuff you can imagine. And then we provide this type of information to compliance departments or law enforcement agents who can then try to investigate criminal flows or try to, in the case of compliance, keep their business clean, basically.
So yeah, at Kaiko too, we have this like double vision of blockchain intelligence, which we combine blockchain data with what's happening off-chain, but for different use cases, more market-related. To really have the full picture of the market, you need to, of course, leverage blockchain data, but not the raw data, more of the like actionable data that we produce based on frameworks and stuff, based on the raw data. And as now markets actually exist in both worlds, we propose this value proposition of providing blockchain intelligence combined with off-chain intelligence that provide intelligence for the market, and specifically to provide signals to hedge funds, VCs around tokens, like any tokens on any exchanges, and so any market.
I think at Dune, we really kind of served the long tail of generating blockchain intelligence. So while all of these offerings are kind of like bespoke, Dune just is infrastructure for actually producing that kind of intelligence. So we're really focused on kind of like, I think we have 50 chains or like 100 chains if you call all the Polkadot ecosystem chains. And we just really want to make that data accessible, and we kind of work together in tandem with our users to kind of like build the best tooling so everyone can kind of like build their own intelligence. Because I don't know how many people are like actually Web3 users, but you go on Etherscan and you kind of like you see transactions and it's like, yeah, it's a bunch of bytecode. Maybe there's like a Etherscan actually has the API and they can interpret that data, but it's like at scale, blockchain data is like, it's transparent, but it's not accessible. And we're trying to solve that problem to actually make that data accessible to pretty much everyone, but especially kind of like institutions, companies, builders in the space.
Brilliant. What would you say data sources is like it's like the foundation of everything, right? If you're gathering or if you want to have high quality data, you need to get the right data sources. You maybe need to run your own validators. So like it's super complex, yeah. So a lot of people don't know what's behind that, right? And what would you say the topic that you mentioned, Anastasia, on-chain and off-chain data? What is really meant with off-chain data at the end of the day? And maybe you can also add some thoughts to the topic data sources as well.
Yeah, so the tricky thing with off-chain data is that in contrary to on-chain data, it's actually very hard to know the legitimacy of the data itself. It's not as transparent as a blockchain, and so even if it's easier to access. So when it comes to off-chain data, it's like it comes from exchanges, so you kind of trust the exchanges to give you the right data. Once you have the whole data, of course, like as Kaiko, where we have hundreds of exchanges, you can compare and really like check the legitimacy of each. So access is easy, but the data itself is kind of harder to interpret and to trust. We're doing some work on that. We have market surveillance solutions that come upon this data. Now when it comes to the blockchain data, and I think like all of us have pretty much the same way of extracting this one, indeed it's technically hard to access, specifically when you're targeting a lot of chains that rely on a lot of different technologies. I remember Solana was a real challenge, and I know it has been a real challenge for all of us. Yeah, despite the technology, which is like running your own nodes and being like act as a validator, and this on several technologies, for blockchains that sometimes have like tons of data, and when I talk about tons of data, it's like really petabytes of data for some chains. This is a real struggle, and of course, the other struggle, and I think Dune does it very well, is the normalization of the data and really like tagging what's what, because you only see transactions after all, and adding these intelligence layers upon the raw data, even if it's clean, it's actually a really difficult thing that you don't have with off-chain data, which is already like clean and stuff.
Yeah, maybe to add to that, like blockchains are really just computers talking to computers. Like it's not meant to be consumed by humans oftentimes. So like, and it's also the blockchain is not meant to like have easy read access. It's like the write access, and like maintaining the current state is like very easy, but accessing the state of a blockchain at scale and accessing the history is like actually it's kind of a hard problem to solve. So I think we're all kind of like collectively struggling with this. And I think on the on-chain, off-chain aspect, it's like you see addresses kind of like doing things on-chain, but like if you don't know that this is Wintermute or this is an MEV bot, or whether like a group of addresses belongs to Coinbase or whether a group of addresses belongs to Binance or something like this, I think like the lines between on-chain and off-chain also like the Binance address is on-chain technically, but like you really need that kind of off-chain attribution, and I think the Chainalysis folks probably are the best in the industry at that. But yeah, without that, it's like it's just computers talking to computers, and we really need like all of these different companies, and we all like have our own verticals, our own niches, and like kind of like allowing people to actually kind of make sense of blockchains.
Yeah, to add to that, maybe I have two thoughts. One is we have the additional problem that we also need the data to be understood by the users. And sometimes we have users of our software which are like police officers who work 20 years in a patrol car, for example, who have never had any crypto address or a wallet or any technical skills. So we need to also have the very technical data and make it easy to digest. And maybe it's easier for Bitcoin and types, but if it comes to EVM chains or smart contracts, it gets very complicated, but we still need the police officer to understand what happened for him to then help the victims in his case, for example. And then we have the second big problem, that we need our data to be very conservative and very high quality, because in the end, it is being used not like solely as like one sole source, but as one piece of the puzzle to in the end convict somebody. And that is like a huge thing, and so we want to make sure that the techniques we use are very conservative, that can be verified, and we also try to have, we call it ground truth, but that basically means if we call something a name, for example, this is like the terrorist group ABZ, we have screenshots and proof of that we can then provide, for example, in court proceedings. Because we don't just want to throw out any labels, any names, because it's in the end very important if it comes to like the actual court proceedings.
Yeah, make totally sense, and that's a good introduction for the next topic, because at the end of the day, the data is fine, but you need to do something out of that data, right? And what would you say, how can you, or can blockchain data provide really actionable insights for traders, investors, companies, and also for law enforcement?
I'll start there. There's something I've thought about a lot when it comes to on-chain data specifically and how you can find alpha within it. Just trying to classify and categorize on-chain data is difficult. It's easier said than done. And trying to put it into a framework that makes sense to people that don't typically engage with this data is quite a challenge. One way we've tried to do it at Glassnode is to think of it in 3 different ways. The first way would be network data, fundamental data, so that's things like transactions, number of users on a network, how much they're using the network, etc. I think that's quite intuitive to most people. The second pillar, or way of thinking about this, is in terms of capital flows. So you can see assets, see money essentially move between different blockchains, within blockchains, etc. That's something you can't do with typical off-chain data. You can't do this in traditional finance. So one of the things I used to do as a bond trader back in the day was pick up the phone and answer calls from clients that would want color on the market. They would say, there's been a big move in German bonds, for example, what's driving this? And then, I couldn't say exactly who had been buying or selling, but I could say, oh, well, there's big buyers on the Japanese side, FX has moved, they're now trying to get more into Europe or whatever the color might have been. They had to come to people like me to get those insights. Now with on-chain data, with it being transparent, they can start to get an insight into this themselves, at least in terms of where money is flowing. That brings us to the third pillar, which is thinking in terms of the types of holders or the types of entities and cohorts on the network. So you can start thinking of entities in terms of large corporations, such as exchanges, custodians, etc. You can think of it in terms of behavioral cohorts, so fast money like hedge funds, or real money, slow money, which may be more traditional asset managers. You can think of it in terms of size, so whales. I think a lot of people have heard of like whale watching in terms of on-chain data, shrimps, small retail wallets, and then in terms of length of ownership of certain assets. So long-term OG holders of Bitcoin, for example, might react to the markets, to moves in the markets in a very different way to brand new retail investors that have just entered the market. So those three dimensions across network fundamentals, capital flows, and types of holders all come together to give you a much clearer view of what's actually happening in the market. And that sounds very simple now to say that, or maybe not, it is in my head at least. But just to get to that point took quite a lot of thinking, because it's easier said than done. We're always looking to improve it, but that's certainly how I would think of it and explain it to traders and investors in particular.
I would have added one thing to that, like what also really matters is the accessibility of the data and making that data available through very traditional tools, like APIs and tools that like either police officers or even financial institutions are used to, in addition to the format itself, which indeed, like you can think of it in different ways. The way we think the format of the blockchain data itself is really considering it as a book. So assets, liabilities, and it's all that. And making it accessible through traditional ways of consuming the data in order to enable the end user, whether it's a trader, hedge fund, a VC, anything, to cross it with any other data sets that they have.
Yeah, you talked about formats. Maybe one funny anecdote is when I started with my first fraud scam investigation, actually in Gelsenkirchen, just a few meters away, I needed to contact and request information from different banks, from Sparkasses and so on. And every time it took a long time for me to get the court order. And then the data I got back was not in form of an API. I actually got like paper back, sometimes fax, sometimes emailed, like as PDF, but scanned PDFs, and we didn't have OCR back then. So that's what we needed to deal with in the old financial investigation world. And when I compare it to all the new types of investigations that are enabled now with blockchain intelligence, I can say that it is much easier to, with just a few mouse clicks, to investigate huge clusters, huge networks of fraudsters sitting everywhere in the world. I don't need any court order because the data is public, it's transparent. And if the investigator has the capacity and has the right tool set for that, he can do investigations much more quickly and yeah, also in a much broader way when compared to the old types of investigations. Yeah.
Kind of scary that the surveillance is that easy.
Well, it's transparent.
But yeah, all the addresses are just pseudonyms. They're not actually anonymous. But I think from the Dune perspective, I've heard a lot about like investors and financiers and like the market perspective. But I think like just over the last few days, like by accident, I had customer calls with a bunch of people, and a bunch of people looked at the same protocol in different ways. So there's the Sky protocol, Sky Maker, or like Sky is the rebrand of Maker. But anyways, so I had a call with S&P Global, which is like the asset, like what do they do? Like asset ratings, and they looked into the Sky ecosystem, and we're kind of like looking at what are the risks in this ecosystem, who are the stakeholders here, what is the kind of like governance distribution, what is the token distribution, and all of that stuff, which I think is like super interesting, that like we're now getting kind of like traditional asset rating agencies like kind of broad, like coming into crypto, and they're in the end they're kind of like rating the risk opportunity of like you get yield by depositing stablecoins into Sky, and then basically like how risky is that opportunity. Then I think on the next day I had a call with Stakehouse, which is a consulting firm which actually works with Sky to do the internal accounting. So like they're like looking at this from a very different perspective. They're looking at the same data, but like they're like completely like they have a completely different kind of lens on these things. So they kind of like produce quarterly reports for the Sky ecosystem or for the Sky DAO. And then similarly, I think the builders or like the actual core developers of Sky, they just use Dune to like look at smart contract interactions. So like they're not even that interested in like, okay, like how does the system as a whole function, but rather like what are the functions that we're actually calling, how much gas are we using, I don't know, it's the utilization of these parameters, right, and so on, so on, so on. So there really is like, I think there's like a very unique thing where like blockchain data is open, transparent, and like we can all just access it, and the state can access it, and government and law enforcement agencies and so on. But really, like what drew me into Web3 data as like I'm a data guy at heart. Like I just love looking at data. It's like so cool that you can just like look at all of this. And like if I work at Sky, I can also look at like the stuff from Maker or the stuff from Aave or the stuff from Morpho, and like actually gain competitive intelligence on other like players into the market. So like also like Coinbase is probably like looking at the data of Binance or something on chain, which I also think is like a very unique aspect of Web3 data. That's just so open and public. It's just all out there, and you can find like the needle in the haystack sometimes.
You mentioned it already. So transparency is key, yeah. And what would you say? How is transparency contributing to the trust to the overall ecosystem?
So coming back to like S&P Global, just doing the risk rating, like that's all public data. You don't need, I don't know, PwC is a sponsor here, but you don't need KPMG or like one of the big four auditors or whatever to like put their stamp of approval, which like sometimes can be fake as well, and like sometimes cannot really like actually be true, or they can be fooled, like in the case of what was a Wirecard. Like you can just show them like random, or like not random, but like falsified bank statements from the Philippines, and then they're kind of screwed. So and in the blockchain system, that's really just not possible. So like if I put my money somewhere and I say that the money is there, then I can actually go and check this. He can go and check this. We can all go and actually kind of like just see like, hey, I can verify this state. So I think at large for a financial system, this is a really interesting new dynamic. Like it will build a more resilient financial system, in my opinion. But then on the individual scale, like that's really problematic because like I don't want all my transactions to be public. Where I said before, like the law enforcement agencies, like there's a good reason for them to like have how do you sort it, like a court order or whatever to like look at my data. But yeah, so there's like a interesting tension there.
Just to complete on that, I think that transparency has really changed the way we consider trust in like any platform. For instance, when it comes to trust, for example, to an exchange, like you choose a platform based on your own due diligence, not on others' due diligence, and because you have access to blockchain intelligence tools that are accessible to anyone, whether it's through Kaiko for financial institutions, or through Dune for retail or other companies. And yeah, I think this is like the real impact that transparency has, the blockchain transparency has overall. And there's actually a case that was actually a big case for crypto. I don't know if you remember, but in February, there was the biggest hack in history for Bybit. And what I found impressive is that thanks to that transparency, many funds managed to get blocked before going away on mixers and on the Bitcoin blockchain because the hack happened on Ethereum. And without that, it wouldn't have been possible or only partially possible. So it really adds security and changes the vision of trust.
You wanted? like to go ahead?
I mean, I can just echo the points I made earlier about the anecdote with me sitting on a desk and having to answer these questions for people, asking me. With it there, the transparency gives them those tools immediately. So I just wanted to reiterate that point, essentially.
And maybe for you, Salih. So the broad media are always like, or the last 5 years, declared crypto as like criminal, connected to criminals. Criminals are using crypto for like shady stuff, right? Do you have like the actual numbers? How high is the rate of overall activities in crypto that is connected to like crime activities?
Yeah, I mean, criminals use crypto, yeah, but they also use cash. They also use other financial services I won't name here. So it's not something special. If we look at the numbers, we publish a crypto crime report every year in February this year, for example. And if we look at the numbers, we estimate that around like 50 billion with a B worth of volume gets transacted to criminal wallets in the last 12 months. That's a large amount, but just like I think 0.14% of the whole crypto volume over the last 12 months. So it is there, and we need to analyze this. We need to try to investigate the cases we see. But it is part of every financial payment system, I would say, because the criminals don't really use crypto because they like believe in it or they're like early, I don't know, investors or something. They use it because it serves them a utility, right? So they can use it because they think, yeah, the police wouldn't be able to find out my activities, or they think I can just move this across borders and then cash out on some island somewhere in a sunny place. So they have their purpose, and that's the reason why they use it, and that's the reason why we are there and try to keep the ecosystem clean, basically.
Just if I may, just a quick comment on this, because it annoys me, and I'm speaking from my own personal perspective, not the firm's. It's not really our field at this point. But when you see in the press, popular press or traditional press, etc., complaining about this point, saying, oh, crypto just facilitates money laundering, well, yes, money laundering is happening. It's always going to happen. Right? It's not that suddenly there's more money laundering happening now because of crypto. It's just moving to a place where, in very small size, relative to the overall amount that's going on, it's moving to somewhere which at least is more transparent than opaque traditional markets. And that's typically overlooked by skeptics of crypto. That's annoying to me because it's actually very obvious if you think about it.
Okay, we have like 6 minutes left on the clock, and I always use the chance to give like the questions, if you have any, to the audience as well, because we have like the brightest mind of crypto blockchain intelligence on stage. So if there is a question, you can raise your hand and ask any questions you want. Is there any? Yeah? Okay, I will come to you.
Hello together. I have a question. Most advanced blockchain analytics are behind paywalls or reserved for institutions. How can retail traders ever compete in a market where transparency is not equally accessible?
Well, I'll just start if it's okay. That's amazing to hear, because that's not my perspective at all. Like, I think that the market, frankly, is saturated with lots of different types of providers, and many do give out a lot of data for free. So from my perspective, it actually is very accessible. And if anything, the bits of value that our firms collectively create and charge for is a necessity for the sake of the industry and innovation. So that's just a really interesting point that you make. And I like the idea that, it's very much in keeping with the original ethos of crypto being open, transparent, democratized, etc. But at some point, you need to fuel innovation, and people need to make money. So I would say the crypto guys have it pretty good, to be honest, coming from traditional finance. Data companies really have data locked down. The exchanges, for example, charge insane amounts for their data. Crypto can't do that. So actually, crypto is way ahead of the traditional finance guys. So, you got a good deal, in my opinion. That's me being cheeky, but yeah, thank you.
Yeah, with Dune, you can literally Wintermute or Selene Capital or the top MEV researchers, the top trading firms, they all just use the same tool that is accessible to you for free. So it's really, you need to build your own adventure, and of course you need kind of like the skills and the knowledge to like actually kind of like extract information from the public blockchains, but it is such a, like I can only echo this point, like it's such a stark difference between traditional finance or something like this and public blockchains where just everything, literally your wallet, my wallet, all my wallet activities, all the wallet activities of everyone in this room, they're all out there on public blockchains and you can actually go and analyze them. Like that is insane. Like you can't access the bank data of like a single person in this room at all, like never. So I think that the difference is really, really stark, and it's really like the alpha just lies in some databases, and you just need to extract it. Yeah.
Should I? Yeah. Well, in our case, I'm pretty happy that we gate our data. I wouldn't want, certain, let's say, foreign adversaries to get access to our data. I think there are a lot of people keen to get their hands on it. So in our case, I think that's a good reason why we try to go through a vetting process for every customer that we get, be it like on the private side or the public side. We don't sell to every country on this earth, and we try to keep it clean because, I know a lot of use cases that could go really bad, let's say, that much.
And just to add that, from what I have seen, the needs for data of retail are very, very different from the needs of data from institutionals. What institutionals need is way to access a lot of data because they would trade on many, many venues, for instance. While a retail may trade like on 2, 3 max and may use like some protocols here and there, and tools exist that are not under paywall for these means. While actually making data accessible at scale on like hundreds of venues for hundreds of protocols it's not useful to retail investors. And I have seen this at Kaiko over the years. At start, we actually started to license our data and tools to access this data to retail traders, but we really stopped very early because we saw less and less demand with the development of other tools, but also because these people actually access the data directly through exchanges, and crypto exchanges actually give this data for free already. So if you trade on one exchange, you can use their APIs directly. You don't need one API that has it all. This is really for institutional use, and that's why it's under paywall. In addition of actually the fact that it requires a lot of work and companies that produce this data.
Yeah, I would say, thanks for the closing question. Perfect timing, like 50 seconds on the clock. More accurate than the Deutsche Bahn, yeah? So many, many thanks. A round of applause for the stars, the panelists.